Everyone is looking at the price tag, but almost no one is looking at the engine under the hood. Today, we are not just reading charts, we are decoding the battlefield. Welcome to the war room. The market right now isn't just choppy, it is a pressure cooker waiting to explode. The institutions are playing a game of chess while retail investors are playing checkers. In this video, I will show you why the weekly chart is acting like a strict general holding us down, but the 4-hour chart is starting a mutiny. We are going to use my Confluence Ritual. First, we read the naked truth of price action, and only then do we turn on the mathematical lights. If you are ready to stop gambling and start operating like a sniper, let's dive in. Let's start with the macro view. Think of the weekly chart as the ocean currents. It moves slowly, but it dictates everything. Look at this naked structure. We had a euphoric rise, and now we are in a cooling phase. The momentum has shifted, but notice these wicks at the bottom? That is the sound of whales accumulating while retail sells in panic. Now, let's turn on the lights. Does the math agree with our eyes? This is the hard truth no one wants to tell you. See this yellow line, EMA 50? It is at $97,900. We are trading below it. As long as we are underwater here, the general of the market is bearish. This isn't a disaster, it's gravity. We need to break the surface at $98,000 to breathe again. Until then, the macro pressure is heavy. Zooming into the daily chart, this is where the trenches are dug. Look at this zone between $86,000 and $88,000. The market tried to push the ball underwater multiple times, but physics pushed it back up. This is not just support, this is a concrete floor built by buyers. Now, let's bring in the indicators for confirmation. Confluence check. Here's the conflict. We have a gatekeeper. The daily EMA 50 yellow line is standing right at $91,550. We are knocking on this door right now. Honesty filter. What happens if we don't open this door? If we get rejected here, we likely go back to $86,000. But listen to me carefully. A drop to $86,000 is not a crash. It is a cleansing operation. It's the market shaking out the weak hands before the real move. Don't panic. Prepare. Now, for the alpha, the 4-hour chart. This is where the mutiny begins. While the daily chart is fighting the gatekeeper, the 4-hour chart is already climbing the stairs. Higher lows, higher highs. The guerrilla forces are winning the short-term battle. Time for the final confirmation. Lights on. This is beautiful. Look at how price has reclaimed both the yellow and purple lines around $89,800. The math is now on our side in the short term. This area, $89,800, is no longer just a number. It is our shield. As long as the price stays above this shield, the bulls are preparing to batter down that daily gatekeeper. So how do we trade this without getting wrecked? Here is your cheat sheet. You might want to screenshot this. The trap. The weekly chart is still heavy below $97,000. Don't get euphoric yet. The shield. The 4-hour chart protects us at $89,800. If this breaks, the mutiny fails. The trigger. We are waiting for a daily close above $91,600. That is the signal that the pressure cooker has blown the lid off. Now, I have a question for the strategic thinkers in the comments. If we drop to $86,000 again, do you see it as a funeral or a Black Friday sale? Let me know your psychology below. This is Bahoretti. Decrypt the noise, master the charts. Peace.